Let me start with what Commerce Secretary Wilbur Ross said this week. He said, we've been in a trade war for decades, and the difference now is we're going to the ramparts. So what do you think he meant by that, and would you agree?
Well, I think we've all very much focused on the importance of trade enforcement over the last several years. The Obama administration brought more actions at the WTO against other countries than any other country in the world, 26 cases, 16 of them against China. We won every case that got to conclusion. So we've certainly taken trade enforcement seriously, and I know Secretary Ross does as well. They have talked about using more unilateral tools rather than the WTO, and I think the world is waiting to see what that means and whether the U.S. Does so within its WTO obligations or violates its obligations, giving other countries an excuse to either retaliate against us or to imitate our behavior.
Could you have done more when it comes to enforcement? What was the bar that you set when you were a U.S. trade representative?
Well, we really focused on enforcement and tooling up for it. We created something called the International Trade Enforcement Center, which brought in resources from all over the government, Treasury, State, the intelligence community, and others that helped us make bigger, more complex, more systemic cases. As I mentioned, we brought more cases than any other country in the world. There's always more to be done, and we filed several cases that are now in the laps of the Trump administration to follow through on, to make sure that they aggressively pursue those on behalf of U.S. workers and U.S. firms. There's always more to be done, but the bar that we set for ourselves was to try and bring systemically important cases that really pointed out significant distortions in market practices. We were successful in doing that. We got countries like China to remove a number of offending practices, and that's what we focused on.
Commerce Secretary Ross has said priority one here is the renegotiation of Nafta. How difficult an undertaking is that going to be for this government?
I think it depends on what it is they're looking to do. We also renegotiated NAFTA in the context of TPP, and Mexico agreed to binding and enforceable labor and environmental provisions, provisions on access to their energy markets, provisions on their state-owned enterprises, provisions on the digital economy. So a lot will, and Canada opened up markets that it failed to open up in NAFTA, things like dairy and poultry. Agreed to a number of intellectual property rights improvements. So a lot will depend on what this administration wants to seek from these countries that go beyond what we already did in TPP. Of course, in TPP, Canada and Mexico already had full access to our market. And so the only thing they got from TPP was access to other countries' markets, like Japan. If you look at this as a series of bilateral negotiations, that kind of dynamic won't be there. It'll be hard to basically pay Mexico to take higher standards with Japanese market access if Japan isn't at the table. And I think that's going to be one of the challenges the Trump administration is going to have to wrestle with.
Secretary Ross wouldn't commit to saying that the NAFTA deal was going to be a trilateral deal going forward here. What's the disadvantage there as you see it to moving away from that if they were to go to a bilateral format, one with Mexico, one with Canada?
The issues are somewhat different between ourselves and Canada and ourselves and Mexico, clearly. But after 23 years of NAFTA, we have an integrated North American production platform. And there are a lot of industries, the auto industry and auto parts industry chief among them, that really see this as one market. And they have operations in Canada, in the United States, and in Mexico. Products go freely across the border repeatedly as a car is put together and then shipped out for export to other parts of the world. And so it will be, if they decide to divide it into two bilateral agreements, they'll just have to take into account what impact that might have on integrated companies that rely upon the ability to send things back and forth across the border without friction as part of their business model.
My last question, Mr. Ambassador, is about currency. When you're in a position negotiating trade deals, how cognizant do you have to be about currencies? We've seen a lot of movement in the peso, for instance, as talk about renegotiating these deals comes up time and time again. How much are you thinking about that when you're acting, say, as a trade representative?
Well, currency certainly does have an impact on trade flows, and that's why, again, in TPP, is the first time ever we had a currency arrangement among the 12 countries, where countries agreed to what appropriate exchange rate policy was. They agreed to make their currency policies transparent to each other, and they agreed to hold each other accountable. What to do beyond that, I think, remains to be seen, because Mexico and Canada have open current accounts. Their currencies are determined by market developments. and there's been no history of intervention or manipulation in a way that have raised concerns. So what people want to do beyond what we already agreed to in TPP, of course, remains to be seen.